Hello everyone, and welcome to our new series where we cover top AIFs in India. Today, we'll be talking about the Buoyant Opportunities Strategies Fund, launched by Buoyant Capital, an investment management firm founded in June 2016, which manages 6,383.23 crore rupees. At Buoyant Capital, the aim is to generate superior cross-cycle equity returns on a long-term basis by optimizing the portfolio based on market conditions. You can check out our previous videos by clicking the info button, where we've covered PMS schemes from Abacus Asset Manager, Stallion Asset, 361, ValueQuest, and many more. In this video, we'll break down everything you need to know, including the fund's basic details, investment strategy, investment objective, insights about the fund manager, investment details including fees and lock-in periods, returns generated, and tax implications on your earnings from the Buoyant Opportunities Strategies Fund. Let's start with the basic details. But before that, a quick introduction to who we are. We are PA Wealth, a full-spectrum investment firm offering expert guidance in PMS, mutual funds, AIFs, bonds, insurance, SME IPOs, startup investments, and Dubai real estate. Subscribe to stay connected with the latest trends and smart opportunities. Let's start with the basic details. The Buoyant Opportunities Strategies Fund was launched on the 19th of April 2022 and manages the portfolio of 1,542.29 crore rupees. Now let's move on to the investment strategy. The investment strategy focuses on generating superior risk-adjusted returns across market cycles by combining top-down and bottom-up investment approaches. The portfolio is dynamically adjusted between core investments and satellite investments to balance growth and capital preservation. In an aggressive cycle stance, the portfolio can have up to 30% in core holdings and as much as 70% in satellite investments, aiming for higher returns. In contrast, during a defensive cycle stance, the allocation shifts with up to 70% in core holdings and only 30% in satellite investments, focusing on reducing risk. The process begins with a top-down macro view, followed by sector selection based on the cycle, stock selection by analysts, and finally an exit decision when the investment thesis no longer holds. Now, let's dive into the investment objective of the AIF. Their investment objective is clear: to consistently generate returns that are higher than the benchmark, while ensuring they are adjusted for risk and sustained across different market cycles. Now let's look at the fund managers of the AIF. First, we have Mr. Jigar Mistry. Jigar has over 21 years of equity research and investing experience, covering sectors like banking and financials, global metals and mining, utilities, and India strategy. He has previously worked with institutions such as HSBC Capital Markets and Kotak Institutional Equities. Prior to founding Buoyant, he was the Director of Research at HSBC, advising top global funds on investing in India. He is an associate member of the Institute of Chartered Accountants of India and a CFA charter holder from AIMR US. Next, we have Mr. Sachin Khivasara. Sachin has over 24 years of equity research and investing experience, covering sectors like automobiles and ancillaries, capital goods and engineering, and small and mid-cap sectors. He has previously worked with institutions such as Nippon Asset Management, Edelweiss, and Enam Investments. He is an associate member of the Institute of Chartered Accountants of India and an associate cost and works accountant. Now let's take a look at the fund's investment details. The fund is structured as an open-ended Category 3 AIF. The minimum investment requirement is 1 crore rupees. There is no lock-in period and no exit load. The scheme offers two fee structures. The first option involves a fixed management fee of 2%, while the second option features 20% profit-sharing fee on returns above 7% hurdle rate. Now, let's look at the returns generated by the fund. In the last 1 year, the AIF has delivered return of 11.2%, while the benchmark gave the return of 5.1%. In the last 2 years, the fund has delivered a return of 22.7%, and the benchmark gave return of 20.6%. Since inception, the AIF generated the return of 23.9%, with benchmark providing return of 18.0%. Now let's take a look at the taxability of earnings from this AIF. Unlike Category 1 and 2, these funds do not have the pass-through status, which means the taxes are paid at the fund level and may vary based on the fund's performance. That's all for today. If you found this video insightful, give it a thumbs up and subscribe for more research-based financial content. Don't forget to click the bell icon for alerts on potential multi-bagger stocks. Got an AIF scheme in mind that you want us to cover? Just let us know in the comments. Thank you for watching, and we'll see you in the next video.